Hey guys, what's up? Alec back with the daily stock market, and today we're going to be comparing three of the top credit card companies against each other to find out who is the ultimate winner and which stock you should be investing in. We're going to be talking about Visa, Mastercard, and Amex. So, three of the top ones. Warren Buffett invests heavily in Amex. So it'll be interesting to actually compare Amex against Mastercard against Visa, and maybe we'll find out what Warren Buffett sees in Amex, and we will be ranking them in order of first, second, and third. So make sure you watch this full video if you are interested in Visa, Mastercard, or Amex, or some of Warren Buffett's stocks because Amex is one of his top holdings. So without further ado, let's get right into the video. So here we have pulled up Visa, and in the last 5 years, if we zoom out, you can see they've been steadily gaining consistently. And they were all the way up to $210 on February 14th. And then obviously they hit a big dip just like everyone else. So if we look at the year, you'll actually see they found a common support and resistance right here, right between $190 and $200. So if I was buying Visa today, I would want to be closer to the about $190 to $200 range. Now, if we look at the stats, you'll actually see their 52-week high, 52-week low. It doesn't move much, which is really good. And the only reason they even went to 130 in the first place was because of the pandemic. But you'll see the market cap is 450 billion. So it's almost a $500 billion company. The PE ratio is 45 and the dividend yield is 0.5. So let's bring up Mastercard to see how the stats compare. So here we have the market cap is a smaller market cap, only 340 billion, and the PE ratio is higher, which is implying that it's not as good of a deal, and the dividend yield is a little bit lower, but it's not much lower, so it doesn't really matter. Now, after this, we'll actually pull up the financials of every single company and do a deeper dive into these stocks. So stick around for the deeper dive too. And you'll see they're up 10% in the month, which is really good. And if you go to the year, you kind of see that they've been following that kind of same support and resistance. The Visa card is very similar. You'll actually see it has that beginning where it's very stable, it goes up and down, and then it breaks up all the way to a new all-time high. And then it has that same dip right here, Visa does. And then it stabilizes again. And I would want to be buying Mastercard right at around like 340, 330 if you are bullish on this one and you want to hold for a long time. Just off the stats, I am liking Visa better so far, but we're going to be diving into the financials next, which is very, very important when you're comparing. We'll look at their balance sheets, income statements, and I'll simplify everything for you too. So let's pull up Amex next, which is American Express, if you guys did not know. So what you'll see here is the 52-week high and 52-week low. It does move more than the other ones. You'll actually see it's doubled since it's 52-week low. The PE ratio on American Express is only 36, so it's implying that it's one of the best deals right now, and the market capital is only $100 billion. So it's significantly smaller than Visa, for example. It's about a fourth of the size of Visa. The dividend yield is 1.2, so now we're actually getting into some great dividend yield. And if you're looking for a dividend company, this is definitely going to be the one for you because it's about doubles the other one. Up 16% in the last month, and it's up 11% in the last 3 months. Now, if we look at the year, it actually does not follow the same chart and graph as Mastercard and Visa does. It's a little bit different. So as you can see here, it's been going up consistently and steadily. It doesn't have too much of a big dip or too much of a big spike. I think this was the consistency that they were showing, Visa was showing in the beginning. And then remember, Visa had that and Mastercard had that spike. So I think here's the spike and then here's the downtrend here. So it does follow it a little bit, but it looks completely different to me. And if we do a screenshot here, you can actually see that they have recently broke out of their previous support and resistance. So as you can see, if we draw the line right here, they definitely broke out. It has not hit that support in a while. The support is now up, so you would have to redo it right here and right here. And I would want to be buying closer in that range. So personally, I would want to be buying around 120 or 115. If it doesn't get that low, it's okay. You can even start buying at 130, especially if you are a long-term holder and a long-term investor. this is definitely a good one to have on your list because it has a lot of room to expand. $100 billion, this can go to a 200 billion, 300 billion. And Visa and MasterCard are obviously the biggest ones, but if American Express starts making its way and passing up MasterCard, for example, this can potentially go to 200 billion, $300 billion in the next 5 years. So let's pull up the financials. We'll start with Visa, then go MasterCard, and then Amex, just in the same order on financials, balance sheets, and income statements. Okay, so first we have pulled up is Visa, ticker symbol V, one of the easiest ticker symbols in the stock market. And what we have is their income statement pulled up first, and it's their net income. And what you'll see is in 2018, they had a 53% increase in net income, which led them to about $10 billion in net income. And then in 2019, they had a 17% increase to $12 billion. But then they tapered off and they actually went down 10% in 2020, which is a little bit concerning. But obviously with the pandemic and everything going on, people weren't spending as much on their credit cards, so it's probably fine. Now, if we look at their total revenue, you'll actually see they have been increasing by double digits almost every single year. For at least 3 years between 2017 and 2019, they were increasing by double digits, which is a great thing to see in a company. Now they went from 18 billion to 20 billion to 22 billion and then tapered off for probably the same reasons we talked about in net income to 21 billion in 2020, which accounted for a 4.9% decrease in total revenue year over year, right? So their revenue income statement looks pretty good. Their balance sheet, which you'll see here, is in 2020, they have a 55% assets to liability ratio. The good thing I do see about this is that it has been steady. So 2016, 2017, 2018, 2019, 2020, their liabilities haven't been going up much and their assets haven't been going up much either. So they do seem like a very stable company. Now, if we go to their balance sheet a little bit deeper, you'll see cash and cash equivalents is up 71% year over year, which is really good. Account receivables is up. Short-term investments is down. Long-term debt is up 53%. So next, let's pull up a Mastercard, which we have here, to kind of see how they compare on everything right here. So net income, they have been growing tremendously on their net income. Look at that, up 17% in 2017, 20% in 2018, and then almost 40% gains in net income in 2019. Now, Visa was closer to $10 to $12 billion in net income, but the increase on Mastercard is so much better, 20, 30, 40% increases, that they are ahead on net income, Mastercard. Now, they did take a 20% slip, though, in 2020, so it's going to be interesting to see how they recover from that, and if they have a big recovery, that can pay dividends in the stock. So what you'll actually see is total revenue has been increasing 10% or more for the last 4 years. So 11%, 15%, 2018 it was 19%, and it's been increasing steadily and steadily and steadily. They obviously had that 9% slip in 2020, so it'll be interesting to see how they adjust and make up for it. But this is where Visa card really takes the cake against Mastercard, because if it was just revenue and net income, Mastercard would probably beat Visa. But if we go down to their balance sheet, Visa card is just so much more of a secure company. For example, look at their assets to liabilities. It's 80%. It's almost matched up 1-for-1 on assets to liabilities, which is not good, because their cash and cash equivalents, which you'll see is up 44% year over year, is 10 billion, right? But if we scroll down to their total liabilities, they have 27 billion. It's up 16% on total liabilities, 27 billion. So all of their cash and cash equivalents, which is 10 billion, will not be able to pay all their total liabilities, which is 27 billion. So if something happens and challenging time comes, unfortunately, Mastercard will not be able to pay off their debts and their liabilities with the cash they have on hand. And Visa card will go to them again, has more of a shot to pay those off. So if we look, we have Visa card pulled up, and if you look at their total assets, they're 80 billion on total assets right there, and then the total liabilities is 42 billion. So they have twice as many assets as they do liabilities. And it's just to show you Mastercard one more time, you'll actually see the total assets right there, 33 billion, and their total liabilities is 27 billion. So overall, the assets to liabilities is going to be better for Visa than Mastercard. So I am going to be officially putting Visa as a higher place than Mastercard. Now we have one more to look at. So let's pull up Amex. So here we have American Express pulled up. We have their net income, and you'll see they only increased 4%. And then in 2017, they actually fell. And then in 2018, they had a huge 20% increase in net income. And then in 19, they had a 5%. And then, wow, look at that. In 2020, they had a 53% fall, guys. Now, if we pull up their total revenue, they aren't even increasing 10% every single year. They only have an 8%, 4% increase in 2017. And then they have the 10% increase in 2018. And then it's only an 8% in 2019. And then they fall about 17%. So their total revenue, net income isn't the best, but maybe Warren Buffett is thinking that they can have a huge increase from 2020 to 2021. You know, they only have $3 billion in 2020, and maybe he thinks they can get back to that $5 billion or $6 billion range, which would be like 100% increase year over year on their net income, which is possible. Now, if we go down their balance sheet, it's absolutely atrocious. Look at this thing. They have so many assets and they have so many liabilities. Honestly, I don't even know how they can have so many assets and liabilities. I mean, and they're matched up. They're at 87%, which is horrible. So I don't even know how they have 168 billion in liabilities when Visa card and Mastercard are 2, 3, 4 times the size of American Express, and they only have like 20 to 40 billion. Right? So this American Express has like almost 200 billion in assets. So we're going to definitely have to click into this balance sheet and see where this is coming from. Now, cash and cash equivalents, they have 32 billion in cash and cash equivalents, which is actually a lot more than Visa or Mastercard. But the thing is, they also have a lot of liabilities and debt. So we'll get to that in a second. What you'll see is they have a long-term investments of 21 billion in long-term investments. That's almost as much as Mastercard's entire asset portfolio, which they have in just long-term investments, American Express. So I think that's where Warren Buffett really sees value in them, because they have so many assets to cover. They're investing in a lot of different things. They're not just a credit card company, as though they might seem. They're doing a lot on the back end with their total liabilities. Look at that, 168 in total liability, 168 billion. That's absolutely enormous. So total equities, 22 billion. Let's see, total long-term debt, 42 billion in just long-term debt, which is down 25% year over year, which is actually a good thing. So even though they have 30 billion in cash and cash equivalents, in my opinion, this is still a scary company to get into, because you don't know what's going to happen in the future. You know, they have 168 billion in liabilities, debts, long-term debts. Even though they have a little bit more assets than they do liabilities, someone like Visa, for example, has half the liabilities than they do assets, so it's making it a safer company. Visa also has better net income. They're growing their net income, and they're also growing their revenues almost 10% every single year. So in my opinion, Visa card beats out every position of Amex. Amex, American Express, is a little bit more risky, but it could have some more upside to it. But in my opinion, the official ranking is going to be Visa card is number 1. Visa is the best out of them, in my opinion, for a longer term hold. Mastercard is second. And then Amex, ticker symbol AXP, is actually going to be the last and my least favorite, even though Mr. Warren Buffett, one of the greatest investors of all time, is invested heavily in Amex too. So he's probably sees on the back end what they're exactly investing in, because remember, you saw they have a lot of long-term investments that we don't know what they are, where we can look maybe a little bit deeper. I'm sure that's what Warren Buffett has done, and see where they're investing their money, and he likes where they're investing their money. Now, also maybe the net income, because it's only $3 billion in 2020, maybe he thinks that they can see 100% increase in net income year over year and a huge increase in total revenue, which is not totally realistic. But overall, I like Visa is my favorite. Mastercard is my second favorite. So if you guys did enjoy that video, make sure you smash a huge thumbs up on this video and share it with a friend if you think they can see value and if they like any of Warren Buffett stocks, Amex, Visa card, Mastercard, or investing in any of these stocks. And I did shut down signups to my close friends list, but I opened up a wait list. So if you want to get on the wait list for my close friends list, so you're first in line for when I open it back up in a few weeks, go ahead and reach out to me in the DMs. This is my Instagram profile, The Daily Stock Market, 64.5 thousand followers. And we post here daily, just like on YouTube. And if you want to actually see some success that people have had, you can click on Student Success. It's a highlight on my profile page, and you can go through over 150 testimonials of people saying they absolutely love it. We also have success number 2 because the first highlight filled up. So if you want to go through this one as more recent ones, and you can read through the success and the results that people have been having from the program. So this program is made for beginners. So if you don't know too much about the stock market, you want to learn a little bit more and progress to the next level, this program is definitely for you and has helped over 600 beginners just like you. So reach out to me if you do need the help. Make sure you are subscribed on YouTube for the full length videos, because as you can see, I only post a minute of videos on my Instagram. I have a really good story, so you might want to follow that on my close friends list. But the full length videos here are going to be on YouTube, so make sure you're subscribed with post notifications on and ring that bell for notifications as soon as I release a video. Tomorrow we'll be releasing another video. It's going to be the Sunday Stock Talk, one of your favorite videos of the entire week that's posted every single Sunday on my channel. So make sure you are subscribed, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.